A good business credit score matters in more ways than one. The better your credit rating, the easier it is to get approved for credit lines, vendor accounts, and business credit cards. Hello, beautiful people. Welcome back. And if you're new to this channel, hey, how you doing? I'm Lisa. And on the Biznezz Academy channel, we're about the buzz in the biz. We help business owners and entrepreneurs build business credit so they can grow and scale their business. Hey, go ahead and click and like this video. And the bonus of that is that you'll be notified every time a new video is uploaded. A video comes out, every Thursday. Get your pen and paper ready. Nuggets are coming your way. In today's video, I am going to share with you seven common mistakes that business owners make that hurt their business credit profile. Mistake number one, yes, you know it, paying your bills late. Paying your bills late or missing payments suggests to creditors that you're not credible. Listen, guys, much like personal credit, when it comes to business credit, you must pay your payments. You must not be late. In fact, what helps increase your paydex score is to pay your bill before you receive your invoice. Now, if you need more help on that, you want to get on a free strategy call with me and work with myself and my team, go ahead and click the link below and sign up for a strategy session, free strategy session that is. Mistake number two, not controlling employee spending. Yes, I said it. You need to make sure that your employees adhere to what your monthly expense amount is. You need to make sure that your employees are not using your business accounts unresponsibly. This is a major mistake that many business owners make. Mistake number three is using vendor accounts that don't report to your business credit profile. Yes, I said it. It is very important to only deal with vendors that report to one of the three business credit reporting agencies. Common mistake that many small business owners make because they assume because the account is a business account that it reports. You need to make sure that they report because the goal is to get a credible paydex score. Credible meaning on a scale from 0 to 100 to get at least a 90 minimum paydex score to show that your business is credible. Mistake number four, not checking your business credit report for accuracy. It is very important. What I would recommend is quarterly. Get a copy of your business credit report just to make sure that everything is consistent and accurate. Because from time to time, much like your personal credit, there may be something reporting that's not yours or that is not correct. So that's very important to make sure that your credit report is accurate so that you can maintain an excellent paydex score showing that your business is credible. Mistake number five is not using business credit at all or establishing business credit at all. Basically, what this means is that you figure because my business has cash flow coming in and I'm comfortable that I don't need to use anyone's credit, I don't need to establish any business credit, and that my business is so profitable that I can take that money, cover my expenses, cover inventory, and grow and scale. Big mistake. Because I promise you, at some point in your business as you grow and scale, you are going to want to use someone else's money, someone else's credit line, someone else's vendor account. You're going to need that so that you can grow and scale. Big mistake that a lot of, especially small business owners, don't make. And the minute that their business, something goes turbulent, like the pandemic, boom, they're out of business because they don't have any liquidity, they don't have any leverage, they don't have any other people's money to help them. Big mistake, don't do it. Mistake number 6, choosing the wrong loan or the wrong loan term. Loans can be very useful for your business. And in fact, I can promise you at some point in your business, if you stick around long enough, you will have a loan, you will take out a loan. But it's most important to make sure that the loan terms match what you need that for. For example, I wouldn't suggest you take a loan for $100,000 with the term of paying that back in 6 months, especially if your business does not show a return in 6 months of that amount and you're hoping and praying. That's not a good loan term. Make sure that the loan term, matches what your return will be on that. Or if you're into real estate, whatever you're going to use that money for, that you're going to have enough time to flip that property or to make that money back. Very important. And mistake number 7, you guys, this is one of the most important mistakes. They're all important to know, but this is one of the biggest mistakes that's very common that most business owners make, especially new startup entrepreneurs and small business owners, is using personal credit to finance your business. Major mistake. And trust me, I had to learn this hard way. You always need to separate your personal from your business. No commingling funds. What do I mean by this? Once you learn how to build business credit, credible business credit, you'll understand that your business can stand alone on its own. It can build its own reputable credit file so that when it's ready for financing, that you don't have to use your personal credit. Now, let me give you a couple quick examples. So first of all, most small business owners, when they start out, they use their personal credit, meaning they'll take money out of their savings account, or they'll have a really good credit score, FICO score, and they'll open all of these credit cards. They'll take these cash advance, and then basically their FICO score goes nosedive because of the utilization and the high limits that they have on these credit cards. And they're so busy trying to hold on and keep their business afloat that eventually their credit score drops, their credit is damaged. And then when they're looking for money to grow and scale, or just to purchase inventory, or just to simply cover day-to-day operation, they're not able to qualify for any funds because their FICO score is horrible. Now, that's one reason why you don't want to use your personal credit. Number 2, so you don't set up a checking account, a business checking account, and you're solely using out of your personal funds. When tax time comes, when your tax advisor or CPA is trying to jot down all of your business expenses for deductions, it's a mess. Nothing separate. It looks shady. Not good to do at all. I had to learn this the hard way many years ago when I had no idea what business credit was, the importance of business credit. I was using all of my personal finances to keep my business afloat, that I actually owed so much money. It was a mess, and I had to learn the hard way. So keeping your personal separate from your business. Okay, another one. When you build and keep your personal and business separate and you build business credit, what you do is you open credit cards and vendors and credit lines that have huge, large limits larger limits than your personal credit would ever give you. And you'll have these larger limits because larger limits are extended to businesses because they know that businesses will spend more money, and that gives you cushion. And then also when you establish business credit, there's a strategy. You learn that credit utilization doesn't play as much of a role with business credit like it does personal credit. Yep. And there you have it. 7 common mistakes the business owners make with their business credit file when they're trying to build business credit. Listen, guys, if you have any questions, any suggestions, or there are any topics that you would like me to cover, go ahead and send me a message down below. And I have some freebies in the description for you, freebie downloads. And listen, if you would like to get on a free strategy call with me because you want to level it up, you want to build business credit for your business, go ahead and book that free strategy session. Let's get on the phone and see if we're a good match. And as always, when you win, I win, and we win together. Now go ahead and make that money. Peace.